Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Okay, how's it going? Happy Wednesday, everybody. It is Crazy Wednesday. Things are not too crazy today. Everyone was expecting the interest rate news. I was watching on the 1 minute chart just to see, let me just switch over to 1 minute, if anything exciting would happen right at the 15-minute mark. We had a tiny move up, a tiny move down, and we've been generally unchanged for a little bit. So market's not too interested or not too shocked or surprised by anything that's going on in the market right here. So anyway, let's do a quick review on our kind of where we are and what's going on with Bitcoin, and then I'll let you go. Looks like just because I've had issues with trying to figure out scheduling. I know you guys are probably not expecting me to show up at this time. So anyway, here we are. Okay, let's look at this day. Last time we were talking, we were considering whether this was a double bottom. Let me see, I've got a strange line floating here. I think this has more to do with the 4-hour chart. Nope. Maybe before I change anything too bad, I better double check it. Oh, it's on the weekly. Okay. All right. Let me hide this to the weekly so that I don't. That's the one thing about TradingView. They love to bleed certain lines over across things, and sometimes it doesn't make sense. But yeah, what we were checking last time was, is this double bottom? This is the weekly. And normally, a chart that looks like this, where you're losing momentum and now you're starting to weaken and you're starting to go to the side, if you lose this bottom here, you're definitely pulling back. So we're definitely there was a strong indication that we were pulling back. But because we kind of showed some support, and on lower time frames we were showing actually an interesting acceleration of support right around this area, I wanted to point out last week that our odds of this being a double bottom and that this bottom holds is not 0. It may be less than 50%, but it is decently, like, it's 45% is still an amazing percent chance, as far as, you know, I mean, that is definitely not a 0% chance. So we have moved off of this bottom, and we closed near the 50-month. So this is, you know, the 50-month intra-month isn't very important, but we stopped there for now. And now we've started a brand new week that is green so far. We've got 4 days, 4.5 days left on this candle on the weekly, and we've been showing a little bit of strength. So let's dig into this and review what is happening. Okay, so first of all, our biggest resistance is this falling resistance line right here. And all I've done is connected all of the highest points on this falling scenario. For those who haven't been around, if you switch it to a line chart, it connects the tips of these points on a line chart. And if you can get 3 points, then you've got a much more powerful line. So I'll go back to the candles. That means that this falling resistance is the level. And what are we doing now? We are struggling with the top of this falling wedge. Falling wedges are bullish, but you do have to still break out to the upside. Falling wedges are not so much fun when you are still in and you touch a critical point here, because the next move in a falling wedge should be a lower low. So I'm really watching closely to see how we interact with this. What makes this move even more interesting is that look at our daily 50-day moving average. Our 50-day moving average is exactly right on top of us. So we have closed it was like $5 above the 50-day moving average right here, with resistance on the upper on this falling resistance here. So we have two pretty strong reasons why Bitcoin needs to come back for a breather. So I'm watching it quite carefully. The things that we have going for us is, yes, we broke above the 20. The 9 has now crossed the 20, so we have momentum to the upside. And, you know, obviously today our candle ends in 5 hours, and this is not a candle of weakness. If we stopped here, this would actually be very bullish, because we maintained the top 50% of our candle, and we did not get a reversal doji. If we actually pull up and our price is like right where we opened, it'll actually be more bearish than if we closed right here. So we're watching this very carefully. The close yesterday was 27,210. So if we can close above that or below that, but pretty tight near our open, then we'll be in good shape. If we close almost exactly on it, then the case of a reversal is more likely. So anyway, this is very, very interesting as far as this goes. Let's go look under the hood at the 4 hour, because the 4 hour has been what I've been using to determine that this was our bottom. So this move down here was essentially our spring. And what has happened is there have been several consolidation areas that we have had to deal with. So I'm just going to put these in here. Our first consolidation area was a range. It started at the top of this here, and then you can see where my line is. This was the bottom of this consolidation range. So we have this range right here. I'll just drag it all the way over just so we can talk about it in a second as well. So this was our first band of consolidation that happened after our big drop. And so we were in this area, and we popped up for just a second, and then we dropped back in. And then when we had this wild thing, this was the XRP news and all of that, and then we fell apart, we had a new consolidation range that was lower. And that consolidation range has a bottom here. So this was the new consolidation range. And what made me bullish on this whole scenario was that we started off at a certain consolidation, and then we fell apart, and we dropped through the consolidation down to a lower range here. So in this consolidation range, we were showing weakness, but we hadn't fully fallen apart yet. And then we got this little spring where we dropped for a period of, this is a 16-hour window here. So we dropped really fast for 4 hours, and then we consolidated for 8 hours, and then we popped right back in. This line is, this is our double bottom that we had been talking about. And in fact, the line is even earlier. It actually began with our very first resistance coming out of the bottom of the bear market in February. So in February, this line has been on our chart for a long time, and so this was the source of our bottom back in June, and then we touched it briefly as a spring off this bottom. And what made me so bullish was that the bear case would have been that we come back up and we continue consolidating in our resistance area. This would have been bearish. If we'd have consolidated below that, it would have even been more bearish. At least if we consolidate again in this area, we have a very dramatic chance of having a, kind of an inverse head and shoulders scenario. Like we could potentially break out the top here, but we almost spent no time in this area. So what happened is we popped right out of this bottom and we immediately revisited our prior consolidation area. So we are now ranging, and it got a little wild. There were some swings here, but we started ranging in an area that was higher than our prior consolidation. This is a momentum shift. We've had consolidation here, popped down. Now we have a higher high. And it was this section here that was really good. When we dropped down, we actually confirmed support in this range. And what did we bounce off of? It was the 50. So that's where things get really pretty on this 4 hour. So anyway, we dropped down, and then because of this move and because of this move, the size of this box increased just a little bit. So I'll just move it up a teeny bit just so that we're scientifically right on where the new range occurred. So we found resistance here. We found support there. We resisted for a little bit, and then we popped up out. And then we met with this resistance level over here. So this resistance level happened August 23rd, and it was our first sort of dead cat bounce after this huge selling climax. And we found some resistance in this area, came back and found support on our breakout zone, consolidated on the upper half of that area, and now we're breaking out again. So this thing, when we were just talking last week, we were looking at this move off of here and how we were moving up into a higher range. Since then, we've followed the breakout perfectly. So now I'm going to delete my boxes just because there's something else I want to show you about this chart. So the perfect, sorry, I've got a little extra noise in here, sorry. The perfect move when you exit the red zone. So we had a couple of really wild exits that didn't last. So a couple of fake outs. But when you finally exit the red zone for real, what we're watching for is we're watching for a breakout, and then we want to get as high as we can. Usually, if our 100's nearby, we at least want to get past that. But we kind of sent some attempts all the way up here. It didn't quite touch anything significant, but we popped right back down. The next thing you want to do is you want to hold the 50. So you've exited the red zone, you've popped up out, and you want to find support either on the 100 or the 50, but 50 worst case, because if you lose the 50, you're back in a red zone again, and it's essentially a failed attempt. What we did here is we found beautiful, perfect support. 2 candles touching the 50, and then we moved back out. And after we had failed to stay above the 100, this move moved us above the 100, and we came back and hit it as support perfectly right here. I know this is kind of small, so let me just zoom in now that we're just talking about this section here. But we got a couple of candles pulling us down and found beautiful support right here on the 100. What's our next target? It's the 200. And by now, the 200 has had time to come down and get a little bit closer. So these attempts, here we attempted the exit of the red zone. We had to reach all the way up to here, 28,150, to even touch the 200. And then this all melted down. We did not hold the 50, just fell all apart. Well, by the time we had put all this consolidation and time under our belt, our next attempt was only at 26,600. It was a $1,500 difference. So we've allowed the 200 to come down beautifully. And normally you would hit it as resistance initially, and then you'd come back and look for the 50 or the 100, and then you would cross it for real. Well, what happened is we attempted to cross it, got a little muddy, and then we fell back and found support on the 20. That's not very typical. But what's unique about this is that rather than coming down and finding the 100 or the 50, we found support at our prior resistance level. So we've had this very well established, consolidation range, resistance level here, resistance, resistance. So it was very defined. And then we came back, tapped it to nod our head that the resistance is now support. And then we broke the 100 or the 200 now. And then we came back and found the 200 as support. Boom, boom, 2 candles right here. And then we've kind of been sideways for about a day and a half until we are now breaking out above this resistance level. In that time, the 50 has moved above the 100, and this move here was our golden cross. And typically, when you have a golden cross, you'll actually pull back into the cross. So we had a pretty strong downward movement because of this golden cross here. And then all we ended up doing is putting a support in higher than this. I was telling the pro channel after this ugly candle, I said, hey, we need to keep candle bodies above this level. And this is the 26,700 level. Because if we get a candle body below this, our increasing momentum where we've got resistance flipping to support, resistance flipping to hopefully support, is breaking down. And the closer we get to the daily, the riskier a breakdown becomes, because on the daily, as we've just barely spoken, we've moved a long ways and we've reached way up into the rafters to get to the daily 50, and it's kind of unlikely that we just continue on forever. So we need to be extremely careful up in this upper range. Well, our lowest close ended up being 26,762. So that means our momentum is still intact. So now things are getting a little trickier because we've kind of done every single step. 50, 100, support 50, break 100, hit the 200. We have support above the 100, then we break the 200, golden, this is our preliminary cross, golden cross. Now we've got price action doing exactly what we want. And in 1 hour, in 55 minutes, we're going to enter a green zone. And that is when the 100, which is right here, you can see this, it is almost on top of the 200. The 100 will be above the 200. We'll have price action, 50, 100, then 200. That's the definition of a green zone. We're in a bull phase. And where does this break down? It breaks down when you stop making new highs, when resistance stops flipping to support, and that's kind of what we're keeping our eye on in the medium, in the pretty short term, just to see if anything's going to fall apart on us. And worst case scenario, if you go from green to yellow, there's probably some pain ahead, and that happens when price goes below the 50. The 50 is currently at 26,614. So you can see this entire progression that's happened on the 4-hour chart, and it is very pretty. So what is happening up here? Well, we have really a very, very cleanly defined increasing support. It's just really steep. That's a pretty steep line. So we're definitely getting into a little bit more of a hyper phase, which is a little bit more, there's a lot more emotions at play right here. So, this doesn't, this isn't the Bible truth. The fact is we're putting in higher lows. If this is a higher low, then that's fine. But, we could even pull back a little bit further and still have a higher low, and our move is still intact. But what's happening is we are putting a lot of effort right around this green line here. Well, this green line here is our daily 50. So that's where our 4-hour candle body stopped, right on the daily, and then we rejected really hard. Early this morning, we came up to it again and stopped exactly on it. And then we started a new candle above, and then we had a bearish engulfing candle. But the one thing that you can see very obviously is look at all these long wicks down here. There is a struggle. So volumes are a little higher, and there is a lot of buying happening, because anytime it starts breaking down, buyers are here to catch it. So people are really keeping their eye on this move to see if it has legs. And so far, we're doing pretty well. So this is our move so far. The next thing that can happen, if it will, is if we can get above this daily 50, then we can really, start moving to the next level. That is going to be a challenge, because we have moved pretty much without a rest from about 25,000 up to 27.5, you might say here. This is a pretty long move to make without really coming back for support and heading up for new highs. This is all pure bullish structure, the whole thing. So at some point, we may have to do some sideways consolidation or taking a break to reattempt this. If you look at the daily, where would that be? It would likely be around 26,600. So if we kind of retreated and found support here, we could still have enough momentum to break outside of this declining resistance and the daily. So we have a fair amount of resistance here. So that's why we're seeing a lot of price action and a lot of wicks and a lot of emotionality right up here, because we're just butting into a ton of different things. Well, if we can possibly get through the daily, we're not out of the woods. The challenge that Bitcoin, the biggest challenge that we're going to face with Bitcoin right now, is that we have a double resistance at the 200. Do you see these two lines here? There's kind of a thinner black line or a thinner blue line here. This is the 200 day. It's going exactly right here. And then this fatter blue line is the 200 week. So if I put it on the 200 week, that's this line. So on the weekly chart, this is our 200 week. Also, you'll notice that the 20 week moving average is right here. We have a triple resistance threat right here. The price of this is so tight. It's 27,770 and 87 cents and 27,772 and 32 cents. This is $1.50. So on a $30,000 asset, the 200 day and the 200 week are within $1.50. This is a major point of resistance. Well, how does a resistance like this break? Well, usually not on the first try. Lucky for us, we have had a first try under the belt. So we've already attempted this and got rejected. So this next touch, if we can get there, will be attempt number 2. The ugly part about this attempt is that if we did go through the daily without more structure, it would be a further attempt than we attempted here. So in other words, this move, we only had to move up a little bit. We moved up $1,360 to get into that area. This move, we had to move, if we get there, it'll be $2,600. So it's an extra $1,000 move off the bottom to reach this resistance, which means it'd be very hard to break this, at least in one shot. If we're looking at probabilities, which we have to think of everything in probabilities, the odds of breaking this is less than 50%. It's just, that's just the way this is. We are hesitating right on the daily, and that's fine. If we can kind of, tackle these things one at a time, that's great. But yeah, I would expect that there is a battle to be waged right here. And what could that potentially look like? part of the story is already in front of us. And it has to do with this close here. So if I can get my line exactly right on top of that close, this close, 27,716, is the highest candle body that we've seen since our drop from the top here. So if we can pull up and get into the vicinity and create a double top here, at least we have we at least have stopped the lower high situation, because we've been putting lower highs in all the way down. And if our next attempt rejects here and we pull back, the challenge is that we're still putting in lower highs. If we can get the mustard to get all the way up and reject off of this section, it would actually put us in a much cleaner place for a breakout zone. So anyway, it's very interesting how this is all playing out, or at least how it can play out. The question is do we have what it takes to get across the daily and get up to here? Because if we can, the odds of us breaking this are very low, but it would be very bullish. We could at least pull back, gain some structure, and reattempt it. The reattempt over here, like in October or something, would be pretty clean. Like I think we'd break through it with a lot of power if we pulled back and got some footing and then reattempted that. But that's kind of the way I'm reading it. It's just kind of where the evidence, suggests from the shape of the chart and from the emotions and kind of where we're at. We've had a couple beautiful days of moving up, and so obviously today we're taking a rest, but if we only pull back a little bit, we could tomorrow get the rest of this job done. But I would definitely be hedging longs and being very cautious around this double 200 area. It's pretty significant. Okay, so that is Bitcoin just analyzed to death. There's probably not much more to look at. The monthly is kind of interesting. We lost the 50-month last month, and this month so far we're recapturing the 50, so we kind of definitely want to do that. And you'll notice that our 9 and our 20 are just like, I think they may have crossed. Yeah, the 9 is 27,102 and the 20 is 26,946. So the 9 has crossed the 20 when this candle finishes closing. So with this cross in place, we are one step closer to that bull market. And with the halving coming in April, we are officially 7 months away from the halving. So that's also another reason why this double, this kind of horizontal channel, the integrity may hold up, because on the back of the minds of almost every Bitcoin investor is where's the safest place for me to enter in anticipation of the halving. And I don't know, is it risky to wait for one more fall, or is it just safer to be in while the structure's in place? So it's tough. It's a tough call. If you don't want to miss it, then you're averaging in and you're trying to position yourself now, which I think has caused a little bit of this buying pressure in this area, because I don't know, will the market bless you with a chance to buy in at 22 and 23 and 24? I don't know. And percentage wise, is that so much different than buying in at 25, 26? That's why I think people might be trying to put in some buys and give some buy pressure in this area. So the closer we get to halving, the more that's going to weigh on people's minds. My final speculation, I'll leave you with this on Bitcoin, is that this is definitely not a weekly line. My final speculation is that in anticipation of the halving event is something that is just baked in to the psyche of all of us Bitcoin traders. Every time the halving has happened, there has been an explosive move. And because of that, these are the red arrows are the halvings. Every time we've had a halving, it has been an extremely strong impulse, and people believe that the halving is going to cause a move up. Well, fundamentally, it was miners not being able to sell that caused these moves. And Bitcoin had generated 50% of all Bitcoin in existence right before this halving, and going from that amount of supply hitting the market, and then miners literally being able to only sell half of what they were doing before, was a huge catalyst in this growth. Now, 75% of Bitcoin exist, and they can only sell half of that quarter, so they're only able to sell an eighth, and that moved the price quite a bit. This didn't move quite as much because 1/16 of the total supply isn't moving the dial, and the halving at some point is going to be a tradition and not a fundamental reason for the price to move. So there is this speculation. If Bitcoin breaks above this line before the halving, we could see a premature move that could be pretty explosive, whether the halving ends up being a thing or not. So the halving is going to have less impact on what Bitcoin does in the future, and it's more the shape of the chart and new entrants. So if we break above this line, the chart itself still has a target of 45,000. If a Bitcoin ETF was ever approved, that would have more impact on the price of Bitcoin than any halving would ever do from this point forward. So those couple of catalysts are kind of out there. All of the past people that are buried in the back past history of Bitcoin, they're looking at the halving, which is going to happen right in here, and they're anticipating prices moving. They could be disappointed if they don't move as much as they have in the past. But the things that will move the dial are the correct chart structure and something like a Bitcoin ETF, where you have hundreds of billions of dollars that suddenly have access to Bitcoin that didn't have the access before. So there's a lot going on here. All right, looks like Bitcoin's having a little bit of a meltdown right now. So let's see what that's doing. Yeah. So our little line here, the 4 hour is closing in 40 minutes, but it's still, as long as we stay above this area, this is a new section of consolidation. So all of this is fair game still for a bullish impulse. If we lose the 50, then we are definitely coming back for more support. But we've got all three levels of support below us, so we have places to catch ourselves if things go wrong. Okay, so that's that. Let's just take a quick peek at Ethereum. So Ethereum is still in a red zone. So same story as last week. If we can ever exit the red zone on Ethereum, it'll be the easiest trade ever. As long as you go long when we exit the red zone on Ethereum, it will be an extremely high probability trade, and especially holding that into the halving. So R50 is officially at 1702. This is where our 50 day is coming in, and it's dropping by looks like $5 a day. $5 a day so far, and that's with all of these candles remaining. So it'll drop around $5 a day until we get past this as our 50th day. Then it'll flatten out. So the 50 is getting closer and closer. This little line here is just to kind of show you, if I projected the 50 all the way out, and we were to go sideways from where we are currently, we're talking about first week in October, we will likely exit the red zone, and Ethereum will be a screaming buy, and the opportunity will be there. As far as Ethereum goes, the things that I've been seeing on the news are this Ethereum Bitcoin valuation that's just fallen apart. So Ethereum, Bitcoin dropping off just means that Bitcoin is outperforming Ethereum right now. Well, the thing our charts love to do lately is establish a very well-established low and then create a new low that's a nothing burger. This one certainly didn't get very high, but we didn't just drop off the face of the earth either. And we're doing the same thing. So yesterday's close on Bitcoin Ethereum was our lowest close. It was past this. Today we're seeing a little bit more continuation with that. So we're definitely in an ugly place, but it just depends, you know. Bottoms are found in red zones. So when we're in a red zone, somewhere in here, if we see a reversal candle or if we see something significant, these things can change really quickly. My speculation as to why Ethereum is struggling so much is that Ethereum is dealing with 2 weekly averages right now. Ethereum has gotten below the 200 and the 50. And even though this is a beautiful reversal candle last week, our entire candle body, just the body of the candle, is below the 50 and the 200, and we've got some work to do to get back up through this. And so when you get here on the daily, you can see this fat blue line and the fat green line. These are the 50 and the 200 weekly moving averages on Bitcoin, or excuse me, on Ethereum's daily. Over the past few days, we had muscled our way above the 50, and we were trying to make progress to hit resistance and try to break down this 200. Because if we could get above that, then we've really opened ourselves up for some nice blue sky. Ethereum or Bitcoin is not having those same problems. The 50 week is still below us, and it's just the 200 down here that's causing us problems. But for Ethereum, we have both of them. So Ethereum's below all of its averages. We're below the 50, the 100, and the 200 on the daily. And right now, currently, we're below the 50 and the 200 weekly. So Ethereum's got some resistance above. So if Bitcoin has a good day and starts moving up and starts showing some strength, Ethereum is struggling to follow or to at least keep up. And that's kind of what we're seeing. If we can get through some of these resistance areas, Ethereum can move fast again, and there may be a faster move for Ethereum than Bitcoin. But it's kind of shown here in these charts the reason why Ethereum is struggling versus Bitcoin. Okay, I think that's it. We've been going for a decent amount of time, so I will let you go there. Very, very interesting market. Bitcoin's doing some very cool things. We'll just have to see how we react to this daily 50. If this is a rejection point, then we've got a distance to fall. We're still bullish if we stay above this, but otherwise we're kind of at the mercy of you know, where do we end up. A falling wedge again is a potential move down to here. If we move down to here, our 50 week is here. So there's a lot of reasons that this is still a possibility, but we'll see. We've built some really nice structure on the 4 hour, and we'll just see if any of that kind of melts down and put in some hedges and watch things pretty carefully. But once we get above this falling wedge here, we should have a lot more optimism coming into the market, and we could see some good upside. Okay, I'll let you go there. Thanks for being here, and we will catch you next week. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.